Welcome back. We are awaiting the October jobs report out any moment. Economists are expecting 113,000 non-farm payroll jobs to be added to the economy, with the unemployment rate holding steady at 4.1%. Joining me now is ZipRecruiter chief economist Julia Pollack, ERShares CEO Joel Shulman, Heritage Foundation economist and Trump economic advisor Steve Moore, and also back with me is Charles Payne, John Lonsky, and Cheryl Cassoni. Thanks, everybody, for joining this morning. We are waiting on the jobs numbers. Joel Shulman, do you have any sense of expectations for 2025 on jobs?
Well, I mean, to Steve's point, I mean, the growth in the last 5 years has been more than 100% coming from government, social services, and healthcare. We're going to continue to see the growth in healthcare simply because we've got an aging baby boomer population. And to that point, we've got something like 20 to 30 million baby boomers that are going to be retiring in the next 5 to 10 years. 20 to 30 million potential baby boomers in the next 5 to 10 years. We're only creating, at best, 1 million jobs per year. And many of the jobs are currently being outsourced. This is a major, major, major problem. It may not happen today. I think today, I agree with Steve, we're going to see growth in government jobs. They're certainly not going to cut right before the election, but I think we're going to see a major problem in the years ahead unless we take care of this issue. We've got to figure out a way to grow jobs here in America that aren't just simply going to the aging baby boomer population.
Joel, you see a number like this, you see a market reaction like this. Dow Industrial's up 153, had been up higher than 170 on this idea that, well, the Federal Reserve's going to have to move if this is the kind of economic story we're talking about. What do you want to do as an investor? Where are you seeing the flows right now?
Well, I'm still bullish for the remainder of this year. We've got 2 months. Usually the fourth quarter ends on a strong note. Despite the job numbers, by the way, there were no major surprises in this. The government increased. The biggest increase was government. And we're seeing manufacturing jobs decline. But we are seeing, some companies, particularly the larger tech companies, performing well. Amazon came out yesterday, had really strong results. And so we're seeing pockets of growth in this area. So I'm still bullish in the last 2 months of this year in terms of the markets. Now, to that point, the markets being high probably also contributed to the job reduction because we're seeing more and more more and more retirements. Got 4.3 million eligible people per year who are eligible for retirement. When the markets are high, as we saw, peaking in periods right before the COVID, kicked into high gear. A lot of people retired when the markets were high. We're seeing that probably again. I think the markets are going to end this year on a strong note. I think the interest rates, to Charles' point, the long bond, the 10-year, is down about 3 bips. Pre-market, it was up 3 basis points. And so that's going to be encouraging to the point that people are going to think, okay, we're going to get at least 2 rate cuts. I don't see it going 50 basis point in either month. But that seems like it's now solidifying when there may have been some concern in the last week or so.
Joel Shulman, are you buying into this rally up 226 on the Dow Industrials right now, or you want to take to the sidelines until after the election?
No, I'm buying into this rally. I mean, I think good news and bad news. I mean, as you pointed out earlier, the interest, and Charles mentioned as well, the interest rates are coming down the 10-year. The market is just moving more or less in an inverse manner to that. We're going to see long duration stocks, which are the more speculative stocks, perform best today. We'll probably see that continue through the year. Now, that does not mean we don't have the issues in the economy. We're all talking about the job growth and government and what we're going to do in terms of creating job growth in the future. Those are going to be the big issues. But I am absolutely bullish on the markets. It's not evenly distributed. We're to the point that Julia made before. There's a lot of unemployment in tech, but it's unevenly distributed. So, for example, we're seeing many of the companies that are employing AI in an effective manner. They're growing the gross margin on the top line. They're cutting SG&A because they're cutting workers, and they're expanding EBITDA. So we are seeing an uneven distribution here in this marketplace. Many winners, and there are many, many losers. And so it depends which side you're on in your company. But I think we will see the year end on a strong note, but that does not mean we don't have larger issues in the future. And I think they're going to come up and haunt us in 25 and 26 and years beyond if we don't take corrective action now.
And these are the issues that the candidates are talking about on the battleground swing states. Great conversation, everybody. We so appreciate all of you. Julia Pollack, Joel Shulman, Steve Moore, John Lonsky, and Cheryl Cassoni. Thank you for joining us this morning.